Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, June 26th, 5:49 p.m. Eastern Time. Coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend. You can see over here on the trend gauge, market leaders showing bullish. Short term, we review the 5 major indexes across 3 time frames. Short term, we're still showing the green arrow for uptrend. Dow and small caps broke below their 21-day moving average, didn't get back above it today. Mid caps broke below Friday, got back above it, and we're still showing the stop sign, but this is close to coming off as the NASDAQ 100 has pulled back. Actually, it can go away on the 21 as we're less than 1% away from that. But on the 50-day moving average, we're still 6% extended. That is kind of the beginning of the upper limit where we're concerned. And when you reach 6% on the high side, you put the stop sign up. We got as high as 11.6% before this recent pullback that we've seen. We pulled back over 4% on the NASDAQ 100 from the high tick to where we closed today, about 2.7% on the S&P, and that's pretty much mostly been due to the big seven. They carried the index up. They're carrying the index or pulling the index back down. So medium term, still above the 50-day moving average on all 5 of the indexes, but still 6% extended for the NASDAQ 100. Long term, comfortably above the 200-day moving average across all 5. So what happened today? We started off with started mixed, a small gap down of about 0.15% on the S&P and the NASDAQ 100, slightly green on small caps, flat on the Dow, and we put in a low immediately and ran up in a really bullish fashion, and that lasted for about 35 minutes. And then we paused and went sideways, and then the first of, well, several bases during the day, but 3 waves of selling hit the big seven, and that also hit, of course, the S&P 500, with tech being the biggest participant. So we went up from being up 1% in the NASDAQ 100, or nearly 1% in the first 35 minutes, as these stocks were ripping higher, to a dramatic reversal in selling coming in, leading the NASDAQ 100 lower. Mid cap, small caps, and non-tech, there was a lot of rotation going on in the S&P 500, which is a very positive sign. It means there wasn't wholesale selling and everybody exiting the S&P 500. You had, and again, it's a reason why we hold such a big foundation in the S&P 500 via the SSO ETF, because this was just one of those days where money flowed out of tech, and it flowed into energy, it flowed into banks, into basic materials, into industrials, into utilities, into real estate. Not enough to offset and keep the index positive, but very clear rotation going on. And it happened just a reversal in January, and in this most recent ride up, the big seven is where the money flowed to, taking a break now, very similar to how we took a break beginning in February for those 7 stocks. So here are the final numbers on the day. RG8, this is our 8 ETF growth composite, outperformed the S&P and the NASDAQ because, well, mid and small caps were down. Mid and small caps led on the day, and usually when they lead, there was bifurcation within the RG8 today, but for the most part, no flashing red signs. Some of the growth are breaking below their 21, but overall leaders did lag today, but and some sold off. Some had nice gains early and completely reversed, but not enough for us to say it's time to cash in your leaders, but we're definitely paying attention to how they're acting. RG8 down about 0.1%. S&P 500, as I said, was up 0.5%, 35 minutes in, but just kept dripping to where it closed at the lows of the day, down 0.5%. NASDAQ 100 down 1.34%. All of the big seven down on the day. Dow just barely negative, mid caps. These were the leaders all day, up 0.78%. Russell led strongly, pulled back to flat, had another run in the afternoon, but also sold off late. Still ended up positive on the day. Global 60/40 down 0.04%. Pretty much small gains for international stocks offset the losses in the S&P, and bonds mildly positive. That was also another positive, that we didn't want to see a harsh sell-off in the indexes accompanied by a big run higher in TLT. We did get upside reversals in TLT late morning, but it sold off by the end of the day, and that meant money wasn't wholesale exiting stocks and flowing into bonds. So that's a positive sign for stocks also. So global diversified 60/40 stock and bond down 0.04%. In-house GROTECTION down 0.60%. We took hit from mostly NVIDIA and Tesla today. Celsius a little bit. Uber and Caterpillar led to the upside. Also TNA and our hedges did their job today. We'll talk about that when we get to the tail of the tape, and we'll review some charts of interest also. Let's dive right into it. Here's your S&P 500 down 5 out of 6 days now. Did get extended to the upside versus the 50-day moving average, over 6% on the move up on 6/16, and that's when we reversed and put in the top. Now down 5 out of 6 days. Note the declining purple line, the ADMA. We tried to get back above that and couldn't. When that rolls over and it's acting as resistance, we really back off the throttle as far as new buys go. Make sure that we have hedges in place and closely monitor all the holdings that we have. We're now just 0.4% away from the 21 EMA, 2.9% away from the 50-day moving average. The green line, the 21, is above this second breakout level, which was basically right around the 4,300 level. This 21 EMA closed today at 4,310. So that we're really looking for that to provide support over the next couple of days. And if it doesn't, a visit to the 50-day moving average could be in the cards, and that's going to change the feel of the market substantially. Not just the pullback in the Nasdaq 100, but that would bleed over into other sectors. And similar to the way we expected strength to come in last week to small caps and didn't see it, we need to see it in the S&P 500. Let's go to the Nasdaq 100 now. Also pulling back for the 5th day out of 6. Got extended, well, really more. It was closer to 12% with the move higher on 6/16. We didn't write down the exact number, but from an 11.6% close on 6/15, we're now down to a 6% above the 50-day moving average, just a 0.5% away from the 21-day moving average. The secondary breakout level, we're basically closing right at it today, around this 357.50-ish area. And I'm talking about a break above this level here from the 5th. Then we had the harsh sell-off on the 7th. We ran into resistance at that same level on the 9th, and we broke out above there on the 12th. That's where we're revisiting that area here. It also coincides with the 50-day or with the 21-day moving average, and we're looking for support there very, very soon. Frankly, we need to see that, because a break below that, and we could be headed to the NVIDIA breakout day, which was 5/25, after the big earnings and the money flowing into the AI and tech leaders. And that's still a long way down, 6% lower. The market will feel like it's coming apart if we see that. Let's go to the Dow Jones Industrial Average. Couldn't get back above the 21, but did close in a trade in a tight range for the second straight day. Basically, the 50-day moving average below, the 21-day moving average above there. Looking for some of the Goldman Sachs is really a serious drag on that right now, with it being down 5 straight days. That's a very high price stock, but need to continue to hold the 50-day moving average here. Let's go to today's leaders, mid cap and the ETF MDY. You can see we got back above the 21, ran into the declining 8. So note the declining 8. 3 of the last 5 sessions has acted as resistance as mid caps have tried to move above that. We want to get above today's highs on mid caps around the 465 level to get back above that 8 EMA and ensure that we hold certainly the 21 EMA, which is flattening out now, but definitely the lows from Friday, because they're not too far away, less than 1% away from the 50-day moving average. And again, as I said, after that nice strength, 2 weeks of strength that we saw in mid caps and small caps, now met with a week and a half of selling. But after 5 straight down days, we got an up day today. Let's go to IWM small caps. Up day today after 5 days of selling, but closing basically on the lows is no good. So when we challenged early the 21 EMA, got back above it, and then failed. When we failed there, we took off some of our TNA, which is 3 times the IWM. We've got one buy on this that's basically about flat, one that's down a few percent. We trimmed the third buy, which when we failed uh, to stay above the 21. We do have a lot of support here around the 180 level, which is also the 200-day moving average right below there. But again, you never like seeing a key moving average tested and then failing at it, which is what we've seen on the 21 and small caps, both on Friday and today. So that's the state of the 5 major indexes. Let's go to the VIX. We had about a 1% range today on the S&P. The VIX popped above the declining 8 EMA, ran into the declining 21 EMA. We want to see this VIX stay below the 15 level, which has been resistance on any moves higher. So that's a level we're keeping an eye on, as well as that would be a change in character over the last 3 weeks if we move back above the 21 EMA on the VIX. Let's go to the dollar. Traded in a very tight range today, as you can see, sitting right on this 21-day moving average. This is kind of neutral. It's about midway between the recent range that it's formed. Let's go to the precious metals and how they acted during the dollar. So a bounce off the 200-day moving average for silver, up 1.55% today. Gold, uh, tight inside day below the declining short-term ultra short-term 8 EMA and the 21 EMA, just up 0.17 on the day today. GDX gold stocks up 0.94%. Again, look how 3 of the last 5 days it's ran into the declining 8 EMA and failed. We do have support underneath at the 200-day moving average and trying to put in a bottom around this between 29.50 and 30 level. Let's flip to Bitcoin, which had a big rally last week. Tight inside day today, down 2.5%. Let's flip to bonds now. We'll go with BND, the broad bond index. Tight inside day, up 0.12%. TLT, you can see we got this another breakout. You can see my alert there. I'll reset that. It's around 107, 103.70, 103.80. We fought at that level for, let's see, 5 of the last 8 sessions, unable to get back above it. If we break above there, that means rates are coming down. That should be bullish. Uh, Rates coming down are never bad for businesses, let's say that. But we may put some money into TLT if we break above that level, and then on any pullback, it should hold. You've got the 50-day moving average, the 200-day, the 8 and the 21, all stacking up there. So coiling for a move on TLT, definitely something we'll be keeping an eye on there. How about the yields? No big move, so you know there's not going to be that big a move. You can see the yield basically flat, closing at the top of the range. Again, these close an hour earlier than the ETFs trading do. And then TNX, the 10-year, down 0.5%. Still a tight range going on with these yields. So that's the inter-asset correlation that we hit on every video. Let's hit the tail of the tape. You can pause this. I'll go through some details. We've got mixed stochastic readings across the 5 major indexes and across the RG8. NASI RSI, this is a big negative. This has crossed lower, and if I'm not mistaken, broke below the overbought level today. This is a very strong trend indicator, and fading it is just not advised. That's another reason why we have been really looking to raise a little bit of cash. Our leading stocks have held up pretty well. Normal pullback off the highs on the S&P, but we're aware certainly that the NASI and the NYSE, uh, which is one represents the Nasdaq, one the NYSE, both pointing lower now. Dollar's neutral. We're trading in the range for yields. VIX, pretty decent size pop today, up 6%. Fear and greed, off of extreme greed and down to 72. The AAII readings, this actually dropped last week. I don't think I discussed this, but everybody's getting excited about yearly highs on the AAII survey. It did drop 2 points last week before the pullback really started, because this registers, I think, at the close of day on Wednesday. So you had Thursday, Friday, and now Mondays. I would expect a big tick up in bearishness and a drop in bullishness when these readings come in this Wednesday. You can see bears ticked up by 5 last week also. We're above the 21. The news, obviously, the failed coup attempt in Russia. Who knows what the real truth is? So much disinformation. Here's what we are off the highs. As I mentioned, NASDAQ 100, 4.1% off the highs, S&P 2.7 off the highs. Fifth down day out of 6, although we're in a 16-day uptrend since the breakout. Second day below the 80 MA, still 21 days straight above the 21-day moving average. Our expectations remain positive. This is a normal pullback from extended ranges, and 6% now just about the outer limit of being extended. So we certainly got quite a pullback as expected. Um, Certainly at times it has felt harsher than it actually was, but it's when it actually hits those stocks hard like it was today. You're not used to seeing Meta down 3.5%, Nvidia down 3.7%, Tesla down 6%. And Tesla down another dollar after hours from 241 to 240. When you own them and you own a decent sized position in them, it certainly stings your portfolio. But you got to remember the days when they carried your portfolio higher, and then keep your stops in place. So we did break a range today, this 360 support level on the NASDAQ 100. Next level down is the 21-day moving average. Here's the intraday. Let's take a look at this intraday action on the S&P on a 5-minute chart, and you can see a lot of euphoria early while we gap down and then immediately put in the low. You love seeing this, but all we did is run into this 43.62 resistance area. It failed on Friday. It acted as support on Thursday before breaking on Friday, and then one wave down, a second wave down, a base and an attempt to move out that failed, and then a third wave down into the close. And it was pretty harsh selling into the close, about 0.5% in the S&P or in our portfolios just in this last 20 minutes. It was looking like it was going to be, a pretty decent day with this base. We're looking for the break up. We got the breakdown. So there's the 5-minute chart. Back to the tail of the tape. You can see really big breadth was very positive on the day, and that's typical when you have mid caps and small caps outperforming. You can see, despite the big move down in Nvidia, semiconductors, led mostly by semiconductor equipment companies, still finished positive on the day. Regional banks, oils, bunch of defensive slash cyclical sectors, transports, and gold stocks finished positive on the downside. You got CKY, those are the typical tech sectors, biotech down, Bitcoin taking a break. In-house in the portfolio, I talked about how we trimmed our TNA on that fail to get back above the 21 on small caps. We sold Google with a break below the 21, and we trimmed our hedge. Uh, Two moves during the day on the hedge. We still have it in place. Basically, this was offsetting. The idea behind this was to offset the Google, Microsoft, and Meta positions because they were very extended right for a pullback, and to a lesser extent, Nvidia and Tesla. So it's doing its job. We trimmed a little bit off of it today profitably. Uh, the move down into the close, obviously had us wishing we would have kept the whole thing on, but that's called hindsight. But we did reduce our exposure again, as we have multiple times over the last couple of days. But the bottom line of the day, the big seven drag on the NASDAQ 100 and S&P. They drag it lower for the fifth time in 6 days, while defensive stocks, mid caps, and smalls closed positive, and again, breadth was very positive on the day. Let's take a look at some recent leaders and the way they acted today, because that certainly was a mixed bag. Leading the portfolio, uber strong out of the gate, closed mid-range, ran into this pivot plus 20% area, the high of the day at 45. This has just been a really fantastic acting stock. We're considering trimming some of this into strength. But certainly if it breaks the ADMA, we will take some of our near 20% gains off the table. Caterpillar had a mixed day. It was strong early, pulled back, had another run, but failed at the ADMA. We're down about 2% on this. It did hold the 21, and money did flow into industrials today. Celsius taking a break after a strong last couple of days, still above the ADMA. Uh, DT undercut but closed like right at this 50 level. We got to keep an eye on this because it's the first close below the 21 since it moved out of its base. Um, Now let's go through the big seven, the big ugly seven today. Meta, uh, very strong, just first close below the ADMA. It's done it before, but look how nicely it's been trending higher. Next up, Microsoft closed below the 21 today. We booked some gains on this when it ran into 350 resistance, and now that it's breaking the 21, Meta and Microsoft are on our chop list for booking those gains. And then if we continue to pull back on the NASDAQ, we can buy QQQ or QLD as a proxy for those two. I did mention Google. After a nice reversal, positive reversal back above the 21 last Thursday. Note the volume was lighter though, and again, we've got 5 out of 6 green days, including 3 of them average volume or better. That's not good action. They've got regulatory issues. They were also downgraded today, so tried to move on a daily off of bounce at the oversold level, but failed again. We sold it for a 2% loss today. Next up, Tesla, harsh down day, 6.1%, breaking the ADMA, still above the 21. May just be time for a rest on this one. Same thing with Nvidia. Below the 8 to this key 400 level that it broke so strongly above 2 weeks ago, got up to 430. Now 4 straight down days, 2 of them on above average volume. A bounce at the 21 day is a must. Or we'll be trimming some of our position there also. Apple. If Apple had a bad day, the NASDAQ would have been a lot worse, but still holding the ADMA, down less than 0.8% on the day. Amazon had a nice week last week, uh, with the breakout actually on Thursday, inside day on Friday, outside negative reversal today versus Friday's action, down 1.6% on the day. I showed Google, Amazon, Apple, Tesla, Meta, Microsoft, and Nvidia. That's the big seven. Let's throw in Netflix. I know it's not from a market cap perspective in the big seven or anywhere near it, but also an outside negative reversal below the ADMA for Netflix. So 2 stocks that broke the 21-21 last week, but were recent leaders. Actually, 3 stocks. We want to keep an eye on them. Monday, not a good day, although volume was light. We're seeing a lot of this selling on light volume, but price is the price, and it overrides volume. Palantir, pretty strong early, briefly got back above the 21, but gave it up. Now the 5th straight day of selling with volume. This was a very strong leader, but it did run 70% from 10 to 17. Certainly time for a base or at least a break uh, in Palantir. And then some excitement with SMCI. SMCI and Palantir were two of my focus stocks on the day. Uh, really strong early. Uh, Back above the 21, back above the 8, but a big negative reversal. Look at the 5-minute chart here. Strength early and then just big selling here. Sideways for the rest of the day, but this 215 level looks like support, but it certainly needs to hold it. You can see it's got support back here around that area, back from early June and the last day in May after its big gap up. And again, this gap up was the same day, that 525, that was the NVIDIA gap up day. And this is, they sell the hardware that those AI chips from NVIDIA go into. Had a very nice run, but now down from 270 to 216.50. So there's some key AI stocks. And let me take a look. How about a couple of more? Snow. Breaking the 21, not a good day today at all for that. AI, the appropriately named AI stock, got a downgrade last week. Couldn't get back above the 21 this week, making lower lows. That has now given up all the gains from, no, not all the gains, 525. This was the day. But the big day that it had was on 531. Then it failed, another big run, then it failed. This is a very volatile stock, and that's going to wrap it. So, as always, we like to hear from you. At Revere, you can email me, don@revereasset.com, or the phone is 855 Real Wealth. That's 855-732-5932. Or if you're interested in becoming a client, we've been hearing from a lot of people lately digging our approach, can email dan@revereasset.com. Reminder, it's not how much you make in the market, it's how much of that you can keep. We've had about a 3% pullback off of our highs, very much in line with what the S&P is doing. We had a nice rally for the month. Typical pullback after a nice rally needs to hold the 21-day moving average on the S&P and the NASDAQ 100. Those are the key levels that we're focused on. And that's it. That'll wrap up Monday, June 26th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.